Today, we're plunging pretty much headfirst into a topic that's just reshaped our world at, well, an extraordinary speed. We're talking about artificial intelligence and generative pre-trained transformers, AI GPT. This stuff, it's changed how we process information, how we interact with machines,
Mhm.
basically right before our eyes. And frankly, the full implications, we're just starting to get a handle on them.
Exactly. And that's our mission today, really. To take a deep dive into these, profound implications and sometimes the hidden dangers, we want to unpack what happens when these super powerful AIs work exactly as they're meant to. How that seemingly normal operation can, well, amplify chaos, really challenge human decisions, and maybe even redefine basic ideas like money or global security.
That's right. And for this deep dive, we've pulled a lot of insight from a recent book, MoneyGPT by James Rickards. We've layered in our own research too, of course. Our goal is to give you a shortcut, help you get well informed on these really critical issues. Expect some surprising facts, maybe some aha moments, but definitely no information overload.
Okay, so let's start with a bit of a reality check. We all use AI, right?
Yeah.
Search, spell check. But this generative AI, does it actually produce like real value? Value that lines up with the real world. It's trickier than it sounds.
It really is. And there was this fascinating exercise, I think it illustrates it well, from Foreign Policy magazine, summer 2023. They got two essays written about the Ukraine conflict, specifically Russia's annexation of Crimea, one by a GPT-4 chatbot, the premium kind, the other by an undergrad student. And they published them without saying who wrote which. The challenge was, could readers tell the difference?
But here's the kicker. What was really striking wasn't whether people could spot the robot. It was how deeply flawed both essays turned out to be. Like, neither one mentioned George W. Bush's 2008 Bucharest Declaration, the one saying Ukraine and Georgia will become members of NATO.
Oh, man.
That's a pretty big deal to leave out, wouldn't you say?
Oh, absolutely. A massive omission. And, crucially, they also missed Russia's invasion of Georgia just 4 months later. That invasion basically screamed that Russia saw NATO expansion as crossing a red line.
Yeah.
And there was no mention of Ukraine's geography, its strategic importance relative to Moscow. A city remarkably not successfully attacked from the east since Genghis Khan.
Right. Even the CIA-backed Maidan revolt in 2014, ignored.
Yeah.
And the human student didn't really grapple with reconciling territorial integrity with the U.S. invasion of Iraq in 2003. It just shows this striking lack of, well, full historical context on both sides.
So what does this tell us about GPT's real limits? Our research points to this. The problem isn't the processing power, or the huge training sets, or even the neural networks. That stuff's amazing. The core issue, it seems, is what it trains on. If the data includes propaganda, maybe biased media reports, then the AI, well, it just repeats that propaganda.
Yeah, you shouldn't really expect anything else, should you? Which brings us to this key point. GPT can produce grammatical, logical, sometimes incredibly eloquent stuff, but its connection to, actual real-world truth. That depends entirely on the truthfulness and completeness of its training data. It's essentially garbage in, garbage out, just really well-written garbage sometimes.
That's a crucial insight. And it kind of sets the stage for this fictional scenario we want to walk you through. It's fictional, yes, but built on tech that exists, capabilities that are coming fast. So picture this. December 2nd, 7 a.m. Eastern Time. The Dow Jones is sitting at 34,210. And we meet Nick Mehra. He's a family office trader. And he has this AI digital assistant named Sarah.
And Sarah isn't just any AI. She's state-of-the-art. 4-layer, deep neural network, proprietary GTT. She can process millions of data points, reports, news, financials in minutes, constantly updating. She even learned Nick's interests, adapted instantly. Like, she wouldn't bother him with the Russian ruble unless he asked. Nick actually liked talking to her. His explanations even became part of her training data.
So Nick, he's betting long-term rates will fall. He thinks there's an economic slowdown coming, inflation dropping. He tells Sarah, buy $10 million in 10-year treasury notes.
Yeah.
And he leverages it 10 to 1. Big potential return, like 200% on equity if he's right. But, halfway across the world, Colonel Huang of Unit 61398 has very different plans.
Yeah, simultaneously, Huang's unit is prepping something called Operation Flash Hit. It's a cyber attack targeting major U.S. stock markets. This is payback, basically, for U.S. sanctions on semiconductor sales. Their plan: flood the order systems of big U.S. banks with sell orders, concentrated ones hitting mega caps: Apple, Meta, Alphabet, Microsoft, Nvidia, McDonald's.
And Colonel Huang is smart, or maybe cunning. He's waiting for a falling market to make the attack hit harder. He learned from the 87 crash, selling just causes more selling. It's a force multiplier. But they're not the only players. Out in Mallorca, you've got these master manipulators, Ronnie Krieg and Stefan Graz. They're waiting too. They spent 2 years building trust with banks like HSBC and UBS using wash trade, basically fake trading, to look legitimate, getting ready for their own move.
Okay, the trigger hits at 10:45 a.m. Eastern. A video clip, it goes viral, shows Fed Chair Ray Dowell. And in the clip, he seems to casually suggest, off the cuff, an extra rate hike next week. Nick Maris sees this. He's aghast. He yells, "This will kill stocks and bonds at the same time." And Sarah, dutiful Sarah, adds his whole tirade right into her training set.
But here's the twist, right? The video is a deepfake, totally fabricated. Ronnie and Stefan made it, used a pirated tool, tons of Dowell's voice and video data, even added a little echo to make it sound real, chillingly authentic. They sent it out to media who weren't covering Dowell's actual speech, which was just some boring thing about mortgage lending.
And then total regulatory chaos. A Fed economist, Tom Faust, sees the video, calls Dowell. Dowell's like, "I never said that." Faust figures it out fast. Got to be an AI deepfake. But wait, it gets worse. Markets have paused, right? Level 2 halt. Just before they reopen, bam, a fake press release pops up. Where? On the Fed's official website. And it confirms the deepfake remarks. Ronnie's crew hacked the Fed site. Faust realizes they're totally compromised.
And this is where the AI cascade just takes over completely. You have these older, simpler algorithms, right? Stop-loss functions. They just follow the market down, sell, sell, sell. Then you have the newer, more sophisticated AIs. Trained on past panics. What do they know? Only one thing. Get out fast. There are no contrarians among the robots. It's just a wall of selling. And this is that fallacy of composition thing you mentioned, right? What works for one AI is a disaster when they all do.
Exactly. Total disaster. The fallout was immediate. By 11 a.m., Dow's down over 1,000 points. Nick Mara, he tells Sarah, "Sell everything." Takes a $6 million loss. Ouch. By 11:45 a.m., level 1 circuit breakers hit. Trading halts everywhere. Dow, S&P down 7%. And nobody knows the full picture. Not about Ronnie and Stefan, not Huang's cyber attack, not the chaos inside the Fed. Passive funds, often run by algos tracking the market, they just add fuel to the fire as investors pull out.
Then within a minute of trading reopening, wham! Level 2 circuit breakers trip. Now the Dow and S&P are down 13%. At Morgan Stanley, the CTO, Arjun Venkata, finds these weird sell orders. Anomalous, they can't account for them, they can't DK them, don't know them. The NYSE basically says, honor these phantom trades or we suspend you.
And they do. Morgan Stanley gets suspended. By evening, they're effectively bankrupt. Put into receivership by the Fed and FDIC, other AI systems, they instantly scan the news, react, cut credit lines, tell customers to transfer funds. Legal reviews that took days, done in minutes. Meanwhile, Ronnie and Stefan, they cash out, close their short positions and make a cool $250 million, convert it all to Bitcoin through some outfit called Polybit Bank, put it in cold storage, gone.
And Colonel Huang's attack. His AI used something called gradient descent through backpropagation. Super advanced stuff. It basically fine-tuned itself in real time to maximize market damage with its sell orders. It just amplified the selling momentum already coming from all the other AIs. At 12:18 p.m., the Dow hits 27,368. It's down 20%. Level 3 halt. Markets closed for the day. Total losses, $10 trillion in stocks alone, maybe $40 trillion if you include derivatives. And the bond market crashed too, adding another, $3 to $10 trillion?
And the final kick for Nick Mara. Later that evening, he's sipping a daiquiri, thinking, phew, dodged a bullet by selling. Then Sarah informs him his bank was closed by the FDIC at 6 p.m., his $30 million cash, gone, replaced by worthless receivership certificates. "Is there anything left?" he asks her. Sarah's reply, "Just the gold."
Wow. Wow. The lesson is just stark, isn't it? Largest single-day loss in history. And the crucial thing, like you said, nobody was really in charge. The system was. It wasn't one mastermind. It was Nick, Ronnie and Stefan, Chinese intelligence, Morgan Stanley, the Fed. All acting, mostly unaware of each other. The meltdown was an emergent property. Something bigger and more chaotic than the sum of its parts.
Precisely. And that's the danger of that fallacy of composition again. Processes that work fine small scale become totally dysfunctional writ large. Think of Keynes' paradox of thrift. Saving money is good for you, right? But if everyone saves at once, the economy tanks. Or, one fan stands up at a baseball game, they see better. Everyone stands up, nobody sees better. Same idea. When lots of similar AIs pile into the same trades, profits vanish. Then in a crash, boom, selling cascade, no buyers, because, like we said, there are no contrarians among the robots.
And then you throw leverage into that mix. Leverage makes AI lethal. Leverage is just, using debt or derivatives to magnify potential gains, but it magnifies losses too, to exponentially. A small dip in the market can wipe out your entire investment or even more if you're leveraged. So AI systems plugged into these highly leveraged markets, they just pour gasoline on the fire.
We saw echoes of this, didn't we? On a smaller scale, maybe. But the dynamics were there in recent bank failures. Like Silicon Valley Bank, SVB back in March 2023, the root cause there. Years of near zero interest rates. It pushed investors into riskier stuff. That whole Tina thing, there is no alternative. And FOMO, fear of missing out, these are, squishy human behavioral things. AI and GPT, they don't really get that.
Right. And SVD made a classic banking mistake. Borrowed short customer deposits they might need back quickly and lent long, tying money up in long-term treasury bonds.
Yeah.
And they hid the risk. Put 76% of their securities in held-to-maturity accounts. That avoids showing losses on paper immediately. Most big banks only keep about 6% like that. Their risk management was, well, a mess. Chief risk officer spot empty for 6 months. The UK risk head focused on diversity initiatives, not financial risk. They're even paying crazy high interest 4.5% on deposits when others offered 1%, just asking for trouble.
And it created this domino effect. Executives started dumping stock. CEO Greg Becker, CFO Daniel Beck. Moody's threatened to downgrade. Then came the deposit run. People got spooked, pulled their money out. SVB had to sell those long-term bonds at a huge loss, $1.8 billion revealed. Their attempt to raise cash with the stock issue failed spectacularly. Then there was all that confusion about bailouts versus bail-ins. Remember, after 2008, the G20 agreed on bail-ins. Shareholders and uninsured depositors take the hit first. And at SVB, over 93% of deposits were above the $250,000 insured limit.
Yeah, initially, the FDIC said, sorry, if you had over 250K, it's gone. That was the rule. But then, like 48 hours later, March 12th, joint statement Fed, FDIC, Treasury, they basically said, oh, just kidding. They guaranteed 100% of deposits, biggest bailout ever, mostly helping tech VCs, wealthy folks, other banks. Janet Yellen claimed no taxpayer money was used, but it came from the Exchange Stabilization Fund and higher FDIC fees, which, eventually get passed to consumers.
And right around the same time, Credit Suisse imploded too, March 2023 again. Forced into a shotgun wedding with UBS, shareholders wiped out those AT1 Cocoa bonds, $17 billion gone, poof, caused $275 billion in losses across that market, just added to the banking chaos.
And we can't forget the crypto side of things. The Bitcoin crashed down 78% by late 2022. All those crypto firms collapsing, Three Arrows, Genesis, FTX, Alameda. That contagion spread. It hit mainstream banking through Silvergate Bank, a regular bank that was knee-deep in crypto. Even stablecoins like USDC got shaky. They had $3 billion stuck in SVB. USDC dropped to 85 cents, threatened the whole crypto ecosystem.
Okay, so how does AI GPT fit into these bank panics? Picture this. An investor asks their GPT assistant, hey, what's up with the banks? Is my money safe at, say, Iger Bank? GPT, analyzing data, might say, well, the situation looks risky. Iger Bank has a high ratio of uninsured deposits. Similar banks might fail. Then it might advise, consider moving funds to larger banks like Wells Fargo or JP Morgan, or maybe buy treasury notes.
And that sounds like pretty solid advice, right? Logical, data-driven. But what happens if AI gives that same solid advice to like hundreds of thousands of people almost simultaneously? It becomes a self-fulfilling prophecy. A digital bank run, everyone knows everything instantly. They all stampede for the exit. Regulators, they're just utterly unprepared, as the research puts it. Bank runs aren't always about insolvency. Banks often operate technically insolvent. It's illiquidity, sure, but mostly it's psychology, loss of confidence, contagion.
Exactly. And the real danger with AI GPT is it turbocharges that panic. It acts faster than humans, faster than regulators can possibly react. The information, the fear, it spreads theoretically faster than the speed of light through these branching network messages. You can't provide liquidity fast enough. You can't meet the demand. You just have to shut the banks down. And even then, AI never sleeps. It keeps scanning global markets, looking for other places to sell assets. It could trigger a truly systemic collapse.
Okay, let's shift gears a bit. Beyond finance, which is scary enough, let's talk about AI's impact on national security and even how it might change what money is. The topic of nuclear war. Well, it's getting more attention now than any time since the Cuban Missile Crisis in '62. You've got the rhetoric around the Ukraine war, the Israel-Hamas conflict possibly pulling in Iran, and then layered on top of all that, AI and GPT.
Yeah, it's serious stuff. Nuclear strategists have thought about escalation for decades. Herman Kahn, back in the 60s, developed this famous 44-step escalation ladder. What's kind of eerie is how much it looks like the design of AI systems, these layered cascades of inputs and outputs. The steps go from things like, ostensible crisis, all the way up through local nuclear war to civilian devastation attack, and finally spasm and sensate war. Grim stuff.
History gives us some real nail-biting examples here. The Cuban Missile Crisis itself, 1962, that was a clear sequence. Hardening positions, super ready status, the embargo. climbing that ladder. But it was ultimately humans who pulled us back. Kennedy and Khrushchev, they were willing to untie that knot, step back from the ring, human de-escalation.
And there's a less famous one, but maybe even scarier. Able Archer 83. 1983. It was a NATO war game simulating a nuclear attack transition. The Soviets. They were terrified. They thought Reagan was genuinely preparing a first strike. They even had this primitive AI system, VR-RIAN, tracking U.S. moves, flagging thresholds for a preemptive strike. They were on a hair trigger.
And again, humans saved the day, literally. A Soviet lieutenant colonel, Stanislav Petrov, his computer system, OKO, slashed warnings. U.S. missile launch detected. 5 missiles. But Petrov had a gut feeling. It looked wrong. He reported it as a system malfunction. Correctly, it turned out it was just sunlight reflecting off clouds. He overrode the machine. And on the U.S. side, Lieutenant General Leonard Perouse decided not to raise NATO's alert level during Able Archer, despite protocol. He sensed it was too provocative. Again, human intuition over the rulebook.
Which really highlights the danger of AI in the military kill chain. AI lacks empathy, right? Cultural nuance, the ability to read a bluff. It just sees escalation as escalation. It follows the logic, recommends the next step up Khan's ladder, which objectively makes nuclear war more likely. Plus, you have automation bias. We tend to trust the machines, maybe overlook their errors or their lack of, real understanding.
And then there's the idea of catalytic disasters.
Yeah.
Third parties, maybe non-state groups, using AI deepfakes, fake threats, hacking to trick major powers into attacking each other. That's terrifying. Plus, advanced AI surveillance could make current nuclear deterrents, ICBMs, bombers, subs vulnerable, creates a use-it-or-lose-it pressure cooker, shrinking decision times dramatically.
It all leads to this concept of flash war. It's the old Cold War mistrust and time pressure, but now you add AI speed, our tendency to treat it like it's human, the automation bias, and its total lack of intuition. It could become this mad scramble up the escalation ladder faster than anyone can control.
Okay, shifting again slightly. AI might even challenge our idea of money itself, turning it into something the Thor's calls moneyness. Money relies on trust. Institutions, central banks, laws, gold, maybe even algorithms now. But what if we lose our grip on what money actually is?
It connects, interestingly, to ideas from thinkers like Marshall McLuhan, The Global Village, and Eric Havelock, who studied the shift from oral to written cultures in ancient Greece. Havelock argued that moving from Homer's immersive acoustic world to Plato and Aristotle's linear written thought was what enabled things like modern money, banking, contracts. It required that linear logic.
But maybe modern media, phone, TV, internet, AI are pushing us back towards a more acoustic, non-linear, non-rational way of experiencing the world, leaving the strictures of the written word behind. Like McLuhan's fish and water were swimming in money, but do we really know what it is anymore? Or just its moneyness, its feel, its vibe?
And artists, sometimes they see these things first. Take Marcel Duchamp. Way back in 1924, he had this mathematical system, thought he could break the bank at roulette in Monte Carlo. He issued bonds to fund it. The bond had this weird photo of him by Man Ray, looking like Mercury or maybe the devil, offered 20% interest, crazy high. Only sold 14 out of 30.
But get this, in 2010, one of those bonds sold for over $1 million. $1,082,500. Original value, maybe $30. It crushed the French hyperinflation. French government bonds defaulted, even the U.S. dollar, down 98% against gold since then. So was it money as art or art as money? It held value better than actual money.
Andy Warhol had similar ideas, right? Business art. He said everything was art. Business was art. His dollar-sign silkscreens from 1982 cost almost nothing to make. One sold for $500,000 in 2020. Again, vastly outperformed the dollar itself as a store of value.
So what's the takeaway here? Maybe these artists sensed a future where money becomes more fluid, its value tied less to institutions, more to intangible concepts, maybe even just sound perceived value, trust, belief. And that's an environment AI built on linear code and hard data might really struggle with. How does it price a vibe?
Okay, let's tackle AI's built-in flaws more directly now. Things like censorship, bias, and this weird thing called confabulation, that ideal picture. AI objectively learning from billions of web pages. It's kind of a myth. What we often see is intentional filtering. Gatekeepers deciding what sources the AI sees, what results it gives.
Yeah, like that ChatGPT China kowtow thing. It reportedly refused to make images of Tiananmen Square, even changed translations to remove criticism of Xi Jinping. Seems pretty clearly aimed at not losing access to the huge Chinese market, right?
And OpenAI talks about these truth tools for elections, saying they help voters. But critics argue it can be a subtle censorship, sidelining views that don't fit the progressive mainstream media narrative that often informs these tools. Big tech has a history here.
Oh, definitely. Remember 2020? The Hunter Biden laptop story. Twitter and Facebook throttled links to the New York Post article. Mark Zuckerberg admitted the FBI had warned them about Russian propaganda, which, of course, the laptop turned out not to be. Or during COVID. Lots of debate around mRNA vaccines or masks got suppressed on major platforms, even when later data raised questions.
Climate change, too. Critics of UN climate models getting deplatformed, labeled disinformation, demonetized. Even though there are real scientific debates, CO2 lagging temperature in historical records, the role of water vapor, over 1,600 scientists signing a no climate emergency declaration, the platforms often picked a side.
Which leads us to bias, the intentional distortion. Developers say they want to eliminate bias, but often they just bake in new ones. And it's tricky because, as the research points out, most human biases actually evolved for a reason. They have survival value, like an ancient hunter being wary of rocky terrain where predators might hide. That's a useful bias. Trying to scrub all bias might remove crucial context.
Google Gemini really stumbled over this, didn't it? That wokeness blunder. You ask for a picture of a pope, it gives you an Asian woman or a black man. Ask for Vikings, you get black Vikings. Founding fathers, you get black women. Turns out there was deliberate prompt injection behind the scenes trying to force diversity goals. It backfired so badly, Google had to just stop letting it generate images of people at all.
And Meta's AI chatbot apparently just omitted Donald Trump when asked for a list of U.S. presidents. So the conclusion seems pretty unavoidable, doesn't it? You can't just blindly trust AI GPT output. It often seems to reflect manipulated algorithms, cherry-picked data, hidden instructions, weighted results, all nudging towards specific viewpoints, often big tech's own progressive policies.
Right. And beyond the intentional censorship and bias, there's confabulation. This is the unintentional invention. It's not like a hallucination. It's more like the AI hits a gap in its knowledge and just makes something up to fill the blank, presenting it as fact. A mental module spinning a story.
That example of Alexander Hamp's obituary is chilling. ChatGPT just invented a fake obituary for a living academic, and when Hamp prompted it further, it doubled down, confidently asserting its made-up details. Or imagine talking to a virtual Marcus Aurelius in the metaverse. Anything beyond known historical facts? That's Meta basically inventing dialogue.
And that's the real problem, isn't it? You need to already be an expert in the subject to reliably spot the flaws, confabulations, the biases in AI output. But if you're already an expert, what's the point of using the AI in the first place? For non-experts, it can just lead to more confusion, more ignorance, that nescience word again.
Okay, so, given all these dangers, all these flaws, what do we actually do about it? What's the path forward? Our analysis suggests, well, an outright ban. Probably too late for that. AI does offer real benefits arbitrage, faster trades. In fact, it's kind of ironic. Portfolio managers might soon be seen as breaching their fiduciary duty if they don't use AI.
And regulation. It's tough. You could tighten circuit breakers, maybe halt trading at a 10% drop instead of 20%. That might limit the damage on any single day. But it doesn't fix the root causes, the bad actors, the deep fakes, the hacking, the way AIs can resonate off each other. More drastic bans, like on short selling or margin lending, they might just signal panic, or bad actors would ignore them anyway.
So the answer seems to lie more with human oversight, human wisdom. Gilman Louie, he's a top AI advisor. He says bias is basically inevitable. You can't eliminate it. The solution, identify it, be aware of it, and then use other systems, other experts, human experts, to counteract its effects. It's about managing bias, not pretending you can erase it.
And Louis revealed something else pretty interesting. He said the most powerful AI applications, they're actually being held back right now by the people creating them. Why?
Yeah.
Because the governance, the controls, they aren't good enough yet. The big fear among the creators isn't some sci-fi AI takeover. It's just chaos, unintended consequences spiraling out of control.
Which connects to Eric Larson's book, The Myth of Artificial Intelligence. He makes a strong case that true superintelligence, artificial general intelligence, or AGI, might actually be impossible. He talks about 3 types of reasoning. Deduction, logical steps, but only as good as the premise, like if it rains, pigs fly, logical but false. Induction, learning from experience, but fails with surprises, the turkey expecting food every day until Thanksgiving. And the third one, the crucial one, AI lacks. Abduction.
Abduction. That's human common sense, right? Informed guesses. Sherlock Holmes solving a crime. It's how kids figure things out creatively. Larson points to studies. A child needs to draw a circle, sees a teapot, uses the bottom. Brilliant. AI. It might pick a ruler to use as a compass, but can't make that creative leap.
Yeah.
So Larson argues when life on Earth is at stake, like with nuclear weapons, excluding machines because they lack even a child's innovative spark. That makes a lot of sense.
It really does. And it reminds me of Hannah Arendt's idea, the banality of evil from the Eichmann trial, applied to AI. AI has no motives. It's thoughtless, it processes, it doesn't think. It's remote from reality, it's artificial. But its diligence, its efficiency, operating without human intuition, without even malice, that, as Art suggested about Eichmann, can wreak more havoc than all the evil instincts taken together.
So putting this all together, what are the practical lessons for you listening right now? How do you protect yourself in this AI-driven future? First, treat AI and GPT as tools. Sometimes useful, sure, but flawed, biased. Sometimes they just lie. They aren't your friends. They don't care about you. And they'll probably fail you exactly when you need them most. So skepticism is key.
Second, diversification in your investments is more important than ever. The research strongly suggests a broad mix. Some selective stocks think essential sectors: energy, agriculture, natural resources, healthcare, education. Balance that with treasury notes, some cash, maybe alternative investments, private equity, and crucially, allocate a good chunk, the source suggests at least 30%, to tangible, non-digital assets. Things like real estate, physical gold, silver, maybe fine art, farmland. If there's a major digital meltdown, these are the assets that will likely hold their value, the ones that get passed over.
And for practical, everyday use, if digital systems go down, consider physical silver, a monster box from the U.S. Mint that's 500 one-ounce silver coins. Costs around $15,000 currently. It's a good way to store value for smaller purchases if needed.
Safeguarding your cash is also critical. Know the insurance limits. FDIC for banks, NCUA for credit unions. It's $250,000 per depositor, per institution, per ownership category. By spreading money across different banks and maybe different account types, individual, joint, you can actually insure multi-million-dollar amounts fully. Another option, buy U.S. Treasury bills. Short-term, very low risk. Hold them at a reputable brokerage firm. Brokerages offer SIPC insurance, which protects against firm failure, and they have strict rules about keeping customer assets separate from their own funds, generally safer than uninsured bank deposits above the limit.
And finally, just be aware of increasing government surveillance. Things like FinCEN, building digital profiles from suspicious activity reports or currency transaction reports, and the looming threat of central bank digital currencies, CBDCs. They could create a centralized ledger tracking every single transaction you make. Complete visibility for the government. And related to that, maybe don't store your physical gold or silver in a bank safe deposit box. In a real crisis where digital money fails, those could be among the first places authorities look to confiscate non-digital assets. Better to store them securely elsewhere.
Wrapping this all up, it seems the ultimate danger of AI isn't really that it will malfunction spectacularly or, become Skynet. It's that it will function exactly as intended, but in doing so, it amplifies our own human flaws. Fear, greed, panic, and reveals cracks in our systems we didn't even know were there. The missing link for AI developers, it turns out, might just be understanding human nature.
Yeah. And think back to those crises we mentioned. Cuban Missile Crisis, Able Archer 83. Who saved the day? It was the humans who didn't just follow the rules. Kennedy, Khrushchev, Petrov, Perutz. They used intuition, judgment. Machines, well, at least the ones we have now, they can only go by the book.
Which leaves us with a final thought for you to chew on, a bit provocative. If money really does morph into this vague moneyness, maybe just a sound, as the research suggests, something intangible, based purely on perception, then how does trust, the absolute foundation of all value, how does that even work in this new, immersive, maybe increasingly post-rational world? What actually happens when money is no more than a sound?
Something to think about. How can you apply critical thinking in your own life, cultivate that human intuition, build resilience against these kinds of shocks? That's the challenge ahead.
We really hope this deep dive has given you some valuable insights and helped you feel a bit better informed for whatever future AI brings. Thanks for listening.